In business news, a Singapore investment firm, Temasek Holdings, has reported a slower portfolio growth in the last fiscal year on the back of weaker Asian markets. The net value of its investment portfolio rose 3.7% to $223 billion, and this is lower than the 8.6% growth it recorded the year before.
The last financial year was Temasek Holdings' most active in terms of investments since the global financial crisis in 2008. Temasek said at its annual earnings review that it had invested $24 billion and divested $10 billion that year. And the three sectors that saw the most investments were financial services, life sciences and energy. For the year ended March 31st, 2014, Temasek booked a net profit of $10.9 billion, up slightly from $10.6 billion in the previous year. However, total shareholder return, a key measure of its performance, came in at 1.5% compared to some 8.9% in 2013.
The reasons why the returns were lower this year, I partly explained, is the fact that about half our portfolio consists of listed companies in Singapore and listed on the Hong Kong Stock Exchange, 8 shares. And if you're listed, you cannot be totally immune to the markets. So these markets actually showed negative returns last year. Over the longer term, as I said, we're pretty confident about our investments and our long-term themes. As I also mentioned, these same markets just over the last quarter have returned 4 to 5% since the 1st of April.
As at the end of March this year, 72% of Temasek's portfolio was in Asia, with 31% in Singapore. North America and Europe made up 14% of their investment portfolio. Temasek said North America and Europe accounted for 40% of its new investments during the year. Meanwhile, Temasek says China will continue to present investment opportunities.
Some of the sectors would include, for example, technology, which is a very vibrant sector today in China. And Rohit mentioned, for example, we have invested in Alibaba. And then, for example, in terms of the healthcare sector, we see the market going through really the next stage of transformation. We also see in resources, agriculture. These are also, you see a lot of globalizing needs, and with the rise in middle income.
Looking ahead, Temasek says Asia will continue to see long-term growth, especially China, which could see economic growth stabilizing at 7%. For economies in the West, Temasek says the US is recovering, but conditions in Europe will likely remain weak for some time.